BIGBEAR.AI is a prime example of an emerging leader in the AI field that deserves a closer look by investors. This tech sector small cap is developing powerful AI decision intelligence solutions that positions the company to capitalize on a government's desire to beef up cybersecurity and create autonomous systems. So, does a promising outlook for BIGBEAR make it a stock to buy right now? And does it have the potential to be the next Palantir? Let's take a look. Advances in AI are rapidly transforming the global economy by automating complex workflows and delivering predictive insights that unlock unprecedented levels of productivity. So what does BIGBEAR.AI actually do? While most companies are rushing to add AI features to their existing product offerings, BIGBEAR.AI stands out as an AI specialist with transformative technology at the core of its data analytics platform. The company has carved out a niche specializing in operationalizing AI and machine learning capabilities for mission-critical intelligence and national defense applications. Through high-profile clients such as the US Department of Homeland Security and the US Army, BIGBEAR has gained credibility as a defense tech innovator in areas like autonomous systems, cybersecurity, and intelligent supply chain management. Perhaps even more exciting are the ongoing efforts to leverage these expertise in enterprise AI and the private sector as a new growth driver. Within digital identity services, several airlines and airports worldwide already rely on its Vision AI technology, which combines real-time images with actionable insights. Products include TrueFace and VeriScan, which are verification systems that streamline the passenger screening process. The potential of Vision AI extends beyond airports, with potential applications in areas such as supply chain logistics for warehouse inventory management and cargo inspection. Ultimately, BIGBEAR is positioning itself to capture growing AI demand across multiple industries. Despite the commercial momentum, BIGBEAR financial results at the start of 2025 have been muted. Company reported first quarter revenue of $34.8 million, a 5% year-over-year increase for the period ending March 31st, reflecting the new Department of Homeland Security contracts and wins in the digital identity business. This growth was offset by delays in government program funding for other initiatives. Increased spending, including a focus in R&D, led to an overall loss of $7 million in Q1, increasing from a $1.6 million loss in the previous year quarter. Management is projecting optimism in its outlook, citing encouraging signs that the strategic focus is resonating with customers. Notably, its current order backlog of $385 million is up 30% from $296 million at the end of Q1 2024, suggesting there is room for stronger growth. And BIGBEAR is guiding for full-year revenue between $160 million and $180 million at the midpoint, which represents an 8% increase from 2024. Company also expects its recurring losses to narrow, targeting 2025 adjusted EBITDA to be in the negative single-digit millions. There's a lot to like about BIGBEAR as it moves to expand into new industry verticals and enter international markets. However, it is important to recognize that the stock does remain a speculative investment based on the company's high price-to-sales ratio, lack of profitability, and long-term uncertainties. Shares are down 63% from their 52-week high, underscoring underlying market skepticism regarding the company's future potential. First, BIGBEAR will face intense competition from larger tech rivals, pursuing many of the same market opportunities. Companies like Palantir, defense industry consultant Booz Allen Hamilton, and even cybersecurity giants have greater financial resources and pose challenges in both defense and commercial AI applications. Second, it's unclear whether BIGBEAR's proprietary tech can maintain its innovative edge. The next several quarters will be pivotal for BIGBEAR to demonstrate its commercial traction and the success of its growth initiatives. And BigBear was led by 3 different CEOs in as many years. Reggie Brothers, who oversaw its public debut, resigned in 2022 and handed the reins to Mandy Long, a former IBM executive. Now, Long focused on cutting costs and expanding the company's platform through its all-stock acquisition of the AI vision firm Pangiam in early 2024. This January, Pangiam's co-founder and CEO Kevin McAllian, who had previously served as the acting Secretary of Department of Homeland Security during the first Trump administration, succeeded Long as BigBear's new CEO. So what are BigBear's potential catalysts for the future? Under Long and McAllian, BigBear tightened its relationship with the US government with more Department of Defense, DHS, and US Navy contracts. Its modules are now being used in the Orion Joint Staff, Seaport, Next Gen, and Foreign Media Analysis programs. They're also being used by Austral USA to produce submarines and Hardy Dynamics to develop drone swarms. And the company has been working with EasyLease and Vigilix to serve the mobility and industrial sectors in the Emirates. BigBear's backlog swelled to nearly $385 million at the end of the first quarter of 2025. And the company should secure more government and commercial deals as its brand visibility improves. And as it gains new contracts, BigBear will start deploying some of its new custom AI platforms, including Pangiam Security Tools, Pro Model, Conductor OS, and BIGBEAR.AI, and monetize them more aggressively. And some of its newer AI platforms, including Veriscan and TrueFace, are already boosting revenue. So where will BigBear.AI stock be in 5 years? From 2024 to 2026, analysts expect BigBear's revenue to have a compound annual growth rate of 9% as its adjusted EBITDA turns positive in the final year. Now, those growth rates aren't that impressive, especially when bigger AI companies like Palantir are growing faster and are posting bigger profits. However, the figures indicate that BigBear's business won't slow down anytime soon. And with a market cap of $1.1 billion, the company's stock price doesn't look cheap considering it's trading at 6.5 times this year's sales. Now, assuming BigBear matches Wall Street's expectations and grows its revenue at a compound annual growth rate of 10% over the next 4 years, and trades at a reasonable 5 times forward sales by the start of 2030, its market cap might rise more than 25% to $1.4 billion over that 5-year period. However, BigBear would need to play all of its cards perfectly to achieve that financial gain. And there's a lot of macro and competitive challenges that could derail its growth plans and prevent it from securing fresh contracts. So based on the fundamentals, investors may want to wait before buying up BigBear. However, the price chart is looking bullish right now. If you're curious about where BigBear may be heading in the next 6 months, watch this video next.